Hi everyone, thanks for coming back to our next edition of Econ Talks. Gareth, big day today with the June 2020 quarter GDP coming out. We're now officially in a recession. I mean, how bad is today's result?
Well, a minus 12.2% quarterly change in economic activity is way off the chart compared to what we've ever seen before. But given some of the international numbers that had come out, and given the analysis that we'd previously had around just how big the effect of the lockdown would be, not a particularly surprising result, slightly better, in fact, than market expectations, and certainly a lot better than the likes of the UK, where I think their economic activity contracted by 20% over the quarter. What is interesting is also, if you went back to April and May, most expectations there for the quarterly hit from the lockdown were for GDP to contract by between about 15 and 20%, although if you looked at Treasury and Reserve Bank, they were picking a 23% contraction. So today's number actually pretty good, and markets, I guess expectations have improved a bit over the last few weeks as we have moved back to, I guess, more normal economic conditions, and there has been a bit of a catch-up in some spending categories that has occurred.
And I guess, I mean, this GDP result is ancient history in a sense. We've seen the economy move on quite swiftly since lockdown and all of those other changes, even accommodation and food services, which took the greatest hit today, trying to get back on its feet, hospitality and such. And I guess if we look back over time as well, this hit is not only huge in context, but also, I guess, the sharpness is quite important to watch out for. Those records we've got going back, the other largest quarterly hit before now was 2.4%. I mean, it just barely is worth mentioning when you're talking a 12% contraction. But also the likes of the GFC, I think the largest hit you had there was a -1 quarterly percentage change at one point, but also you had 6 quarters of negative growth. I mean, although we're technically in recession now, going forward, we're out of recession when we get the next round of GDP numbers, aren't we?
Well, technically we are, I mean, expectations are for activity to largely, not entirely bounce back in the September quarter, but for a lot of that to come back. But the issue is that a lot of the time with some of these sort of indicators, the worst of it, particularly from a household perspective and also a confidence perspective, is that it doesn't really feel like you're in the worst of it until the official numbers have all been and gone. And that's going to be more than usual, more than it usually is the case in terms of these figures is here. I mean, look, most expectations are for economic activity in the September quarter. While it's going to be a lot better than June, it's still going to be down on what we were doing or the activity we had in September last year. Look across the range of forecasts, it's anywhere between about 2% and 7% down, which is still, big numbers. Yes, we'll have the effects of a 2.5-week lockdown or partial lockdown in Auckland in there. But what it really tells us is that you've still got the massive hit coming through for the economy from the borders being shut and what that's doing for the likes of tourism, the event sector as well, the restrictions on gathering sizes. And so there's a number of industries where that activity is just not going to come back particularly quickly. And so, yes, out of recession in technical terms, but there is still a lot more pain and difficulty to come, and that's not going to be spread evenly across the economy.
Yeah, and I guess it's important to realise, like you say there, that the bounce is always going to occur after something like a lockdown. So September was always going to be better than June, sure. But if you look at it versus likes of September last year, those pre-pandemic times, we're still not back towards normal levels of operation, and we're not going to be for a few years yet. And so it is going to take a while before we get there. But what was interesting as well, and you highlighted some of these earlier around the likes of the UK with a 20% drop in its second quarter, that those differences in how the globe is moving at the moment have been quite stark. New Zealand having one of the hardest hits immediately, but also the profile moving forward is probably for New Zealand to do better than other parts of the world. And I was looking at some numbers today that highlighted that those case numbers of COVID-19 are still quite high and actually still going higher in some parts of the globe, the likes of Latin America, for example, but resurgences as well in Europe and the US. And so what I think we're seeing at the moment is that those disruptions and the possible ramifications for lower economic growth across the world are going to continue to hit New Zealand because we are a small trading nation at the bottom of the South Pacific. And I think, again, when we look at where the path forward for New Zealand is, it's better than we might have originally expected, sure, but at the same time, that hit is still very much going to percolate through the next 2 or 3 years before we start to rebuild that economic momentum.
Yeah, that's right, and that's without even starting to think about when the borders might reopen. If you're just thinking about, goods trade and the sort of weaker demand conditions that you're likely to see in China. They were one of the first countries, obviously, into lockdown and being hit by COVID, and yet you look at the retail activity there, and it's still trading well below where it was a year ago. So that recovery there not coming through. And you still got a lot of issues to work through in the likes of the UK, US, and other parts of the world as well. So you can see, the path there, or the ramifications in terms of what it means for our sort of export incomes, both in terms of the price we're able to command, but also just the ability to sell through the global economy as well.
Absolutely. Look, I mean, today's result, a huge hit to the economy, reinforces what all of us already knew, that this pandemic and that immediate short, sharp shock with level 4 was going to be the most incredible hit on the economy we've ever recorded. The hope, of course, is that we can continue to build that momentum going forward, but that path is still going to be so difficult, and we've got to watch out for that, I think, moving forward. Look, Gareth, thanks so much. Always great to chat. Hopefully, we'll have some better news coming up soon, and we'll catch everyone on the next edition of our Econ Talks. Cheers.